Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. It is Wednesday today. It is the 11th of December, and it is it is an FOMC day. I got the hiccups, sorry. So we have a general rule in the market. Do not trust the first hour following a Fed announcement event. So, really, at TRI, we're basically on hold. It's about an hour from now. You can see it's 10:30 on the wet coast here. So it's about an hour from now when that Fed announcement happens. And it is 2 hours from now when we should probably actually start making decisions about which direction we're heading in the market. And as well, the Fed now has their press conference following the announcement, the actual headline number, which actually works perfectly. In years gone by, it was just don't trust anything for an hour. Now they've actually made this press conference, which, gee whiz, goes on for just about an hour. So really the key here is we have to listen to the message from the Fed. Do they feel the economy is strengthening, and so as a result they're going to have to be raising interest rates? Do they think the economy is weakening, and as a result they're going to have to lower rates going forward? That kind of talk. For whatever it's worth, and really it's a mug's game trying to outguess the Fed, but my hunch is they don't change the rates today. And if we look at our risk-on, risk-off matrix, we can see that the US dollar index is pressing its lows here. But be warned, everybody, this could very easily be a trap. I often see that ahead of Fed announcements. They'll push the market one way. Then the Fed announcement happens. My hunch is they're going to say the economy is relatively robust. There's little need for us to lower interest rates any further. We're starting to see inflation come back into the picture. Employment picture is getting a little better, that kind of talk. We'll see how it goes. At the same time, they're also going to be stating the blatantly obvious. We are data dependent. We do not want to be perceived as affecting the political cycle, and we are heading into an election year. And then finally, international markets and trade wars and all those kind of things are a big unknown, lots of uncertainties. So we're just going to take it day by day. That's probably that's what I would expect them to say. But let's see what happens. Having said that, I don't think it's a good idea for us to be inferring anything ahead of this announcement, and probably tomorrow's broadcast we'll get a little clearer idea. Did we break these lows, and as a result, big AB equals CDs painting down to the bottom ends of ranges? Do these lows hold? Maybe we W out here and we have to head back up top. Right now, you can just simply say we're testing the bottom end of the range, and be careful not to get too caught up too short here. Same sort of thing with the broader market as well. Probably a lot of position squaring ahead of that Fed announcement. And this picture could change in a heartbeat right after that Fed announcement. So be careful here. Don't infer too much into the market right at the moment. Some pretty big macro events going on around the world. Obviously, we have the British election tomorrow. British pound has caught quite a bid heading into that event. I wonder whether it's a buy the rumor, sell the news. I also heard, too, that at the British polls, the Labour Party was perceived to be gaining on the Conservatives, and so as a result, the British pound lost a bit of inertia there. I think the market was kind of hoping that the electorate wouldn't bother showing up. The Conservatives just walk right back into office with a bigger, maybe even a majority kind of idea, and they can dictate policy carte blanche. We'll see how it goes. Well, let's see what happens out of that election tomorrow. As well, too, I mean, God, we got a lot of big macro things going on in the world. I'm a little worried here that this oil market has been one directional now since basically the beginning of October. Could we use a bit of backfilling? The old expression in the commodities market is you buy your unleaded the middle of February and you sell it the middle of May. You made money 9 out of the past 10 years. So with that said, could we get maybe a month or so of pullback here on the crude and energy markets into that seasonal bottom period, the end of January, beginning of February. I think it's highly likely, and I wonder why the energy market has been bid up so well. And the long and short of it here is I do believe that the Saudi Arabians had a vested interest to try and get this Saudi Aramco IPO done. It has now been done. It's been priced. It's been placed. They collected the money, yada, yada, yada. So now there's no sort of incentive for the 1% to keep prices firm. So be careful here in the energy pits. I got a funny feeling there's a bit of trouble brewing there. And then also, too, what I noticed is this is a study of the Dow Jones Transportation Index versus the Dow Jones Industrials. And Dow theory sell signals develop when you the industrials are in orange here, transports are in blue. If you see, where's a good example? Actually, we should probably put these on opposite scales, but Dow theory basically says that if you see the industrials go to new highs, but you don't see the transports go to new highs, that's a warning sign. And actually, it is a sell signal outright. So I did find it interesting that you can see the industrials in the orange, they have gone to new highs. But notice the transports failed against this old high. And the transports actually have a confirmed M top working. That's not bullish. So be careful here. And my thesis all along here was I do believe that, in essence, they were doing nothing more than a good old Gann 1 year move from low to high. So I am still very interested in going and buying some more put option insurance. And of course, if we do 50% rules, it shouldn't surprise us if we happen to see the Dow in sort of the middle of January, maybe early February kind of idea, hangover from the Christmas rally, us back at about maybe like 24, 25,000 on the Dow. Wouldn't surprise me one bit. And we're actually starting to get little warning signs. Uh-oh, Dow theory sell signals are actually kicking in here. So be careful, everyone. And of course, we look at our risk on, risk off. There's little M's in oil. Uh-oh, that could get dangerous. There's that big M in stocks with a cute little M coming into the Fed. Me, as I said, what I'd love to see is a nice little final FU move to new highs, and then the correction starts in earnest. It is interesting to see the gold, the bonds, even the yen to a little degree is actually perking up here. The only problem with this picture is we got Fed here today, and this all could change dramatically by, in about 2 hours. So be careful, okay? Don't read too much in today's price action. One thing I will say, and we've been squawking about it for a while now, things like Barrick, where they're going to W out on other sides of trend lines and start working their way higher. That appears to be the case. And, of course, Newmont, biggest gold stock in the world. Wait a minute. No, this guy is. No, I want that title back, damn it. So they announced that they're going to buy their own stock back. They don't even think about going in and maybe going and finding new gold deposits. No way, man. Just go and buy the stock back. We want the biggest gold stock in the world title back, damn it. And, of course, you can see the gold and stock index itself is slowly working its way up to this bullish bot AB equals CD target. And also to big fat round number, $100. I think that's probably, going to happen. We just made a new high here today. So, these are kind of fun moves. Nice uppies. They're looking good. But, I want to capture this 10-15% move. These are not 10-15%. So this is actually where I really like trading the junior and intermediate names. And, of course, I've been squawking to you guys a while about good old Alio. So great to see. Alio's just kicking butt here this morning. I bought this key reversal bar here, and gee whiz, I'm up about a nice, 10-15% on my money so far. So I like this as a proxy in the gold space. You can see there is some serious buying coming in here. Don't chase. If you do want to pick some of this up, work your orders at reload zones, gaps, that kind of fun stuff. But good looking to see we're on the right side of the trade here, so that's good. So, risk on, risk off. Actually, I'm kind of liking the risk off side of the market now a little bit better. I still have my bond puts. That was a TRI SOF. It's out into the spring, the put option. I don't really want to touch it, but I could see a bond market rally here if the stocks do roll over in earnest. So just be cognizant of that. We had our TRI SOF meeting last night, and I've also been doing some scans here recently in the market. This is VCIM, Venture Cap Investment Model, tax loss selling, buy when it snows, sell when it goes, seasonality. Absolutely love VCIM model taught to me by an old VSC floor broker. And this guy, Telogenomics, if you happen to be in Canada, I would take a real good look at this guy, and you can see the chart. I mean, the chart should speak for itself. Absolutely destroyed. They rolled the stock back. Shares for debt. Spent a lot of time in the daily brief going through what does VCM criteria look like. Why is shares for debt so important when hunting for value in venture cap space? Options to directors. Big financing done. It's funny, we have a site member who actually used to work for one of these pump firms here in Vancouver. And gee whiz, Mackey Research just so happens to be in the deal of the financing. So Riza is getting a really good lesson in Capitalism 101. And I would just consider this a really, really interesting idea. So these are the kind of names that good old Brian likes to really look at. And you can see 50% rules. I mean, this thing's got a bit of money to be made here. And, this was the Alio, same sort of logic. I want to see W's, that kind of idea. Hopefully you can see the similarities here. So there's a new name for you to chew on today. TELO. All right, let's head on over to crypto now. And, unfortunately for the corn, we're at a really, really tough location. I generally like to keep these conversations with you guys in the public off the higher time frames. And what I'll just simply say is we've been watching these bull-bear battle lines on the triumvirate here, Litecoin, Ethereum, and Bitcoin for, the past week or two. How were they going to resolve? And unfortunately, as you can see, Litecoin failed. So it's working a new bear pattern here. Ethereum this morning failed. It's working a new bear pattern. And you noticed I've thrown on bot levels here. What's fascinating about Ethereum, yes, I'm looking at it on Phoenix, but that's just because I want the data from the last cycle lows, and I can't get that on Stamp. So, obviously these numbers are going to be slightly different on your various exchanges, but nonetheless, if you were working off of this Phoenix chart, you can see A, B, C, D. You can see bot entry levels, 142.50. You can see the inside bar failure. If we drill down to like an hourly chart, we really see this set up pretty well. So there is the move, top to bottom. Counter trend rally, did 33, then one high, two highs, three highs. There is the weekly fail level, and gee whiz, there's the bot sitting there going, well, if this is an AB equals CD, it's painting down to $94. And I even put tweets out to that effect. Like, these ones have broken, so you can see the fail on the weekly level on Ethereum. And I think I talked, I know I put tweets out about it. I don't know whether I talked about it in the free videos or not. But Litecoin has failed as well. And Litecoin does have a few AB equals CDs already working. So I got this big honking one off the top. We've got this one here now. And then we can also draw a new one off of these levels here now. They all seem to project down into sort of this 33, 36. And I was talking with the site members in the Daily Brief today about the irrelevance of the golden ratio, and how I think that this thing, I can't see why it wouldn't be hit here. I mean, it's just only logical. So not a hell of a lot to get excited about in crypto. From the sort of big three triumvirate, we're just waiting for Bitcoin itself to confirm this weekly inside bar. It hasn't happened yet. But it is interesting to see things like algos and stuff are back. They have no choice, right? Whatever the market state is, they have to go with whatever that is. So as you can see, daily's pointing down, 4 hours pointing down, hourly's pointing down. Mr. Day Traders, gotta go short. Gotta be hunting those shorts. So it's really cool. We had the contest winner, the last school program. This guy is given back so much. I mean, he's totally paid for the cost of the level 1 course, building out automated trading scripts, and even has this thing running on the BitMEX test network. And all the trades are being recorded. So way to go, dude. And you can see, just on the day, he's up a nice 10, I don't know, I'll call it 11, 12%. Just for a day's work. And look at the trade sizes. They're like $6. I love this guy, Peter. You're the best. And also, too, Peter was working away with another one of our site OGs, Shane, on building the cost of production models. And how do you build scripts to actually show you the cost of production with the different various mining equipment. Just beautiful work. I mean, just stunning work. So anyway, that's your story of crypto this morning. I'll just leave off with this idea that you don't necessarily have to be in love with the big three while they're doing their things. You guys have heard me squawking about this algo. And remember, I think it's a good idea to price your assets versus USD. If you start pricing your assets versus Bitcoin, is that really a function of your coin doing better and has a bottom working, or is it maybe Bitcoin has to come down and your coin's just trying to stay stable? That's another conversation altogether. But I think that if you're going to take a risk in this kind of space, that this is kind of the names that I like to look at. And this is very much similar to this kind of conversation, right? Remember, Brian's a cheap ass. He wants to try and buy against the bottom end of ranges. So I found it fascinating when I woke up this morning with all the heaviness out of crypto that this guy was actually up on the day. Well, what the hell? That's not supposed to happen if crypto's down the way Bitcoin is. I'm not necessarily pounding the table. I'm not telling you to buy it, but it just goes to show that, just because Bitcoin, Litecoin, Ethereum are down on the day and looking like crap, that doesn't necessarily mean that all crypto looks like crap. I love the idea. If you want to just throw in some reload zone bids here, and if you want to join the party, awesome. Don't chase. You're not allowed to chase. But the irony of this guy is actually, even if you stepped in here, you'd be basically buying W levels. So it just goes to show, and that's really the message I just wanted to impart on anybody who actually watches this video, which I don't think there really are many people who watch it, but anybody who is watching it, hunt your W's. W's, keep it simple. And until Bitcoin does actually start Wing out here, ironically enough, I actually prefer names like this over something like a Bitcoin. So, okay, guys, I think we'll leave it at that. Thank you, everybody. If you are watching this later, we had a really lively session in the Daily Brief today. It was a lot of fun. Great to see some of our characters made it out of interesting countries in the world in one piece. Way to go, Reza. Have yourselves a great day. All the best. And, of course, don't trust the first hour following the Fed announcement. All right. All the best, and bye for now.